You're listening to Carrie Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to the Financial Survival Network. I'm Carrie Lutz. And hey, as we speak today, gold hit $1,975 on the spot, up $21.30 the ounce. Silver is up nicely as well, $25.50 the ounce. Is it the start of a big rally? Well, we'll see about that. And what about the stock market? Is it going to go inversely from gold and the dollar? Well, let's talk with our good friend Dee Carter, Carter Financial, I should say. And Dee, it's great to have you back on the phone here talking about this.
Hey, it's good to be with you again, Carrie. It's an interesting topic. I get questions generally weekly. Someone asks me about gold and silver investing. They ask me, obviously, we talk about the stock market, but perhaps mostly gold has been around. It's mostly entirely associated with the history of money over the years, way back, and it's the basis for coinage and monetary systems. And it's particularly popular due to its specific chemical nature. You know, you can't do much with gold. Now, silver's different. You can do some manufacturing with silver. There's some electronics that use silver, but gold is not. You can just about use it for jewelry or coins, and that's just about it. But my biggest question, the one that I get most of the time, Carrie, is it a good investment for a retirement portfolio? And I go along with the large majority of those people that do what I do in saying it's probably not a good idea for a retirement portfolio due to the nature of gold itself and how you have to get it and how you have to keep it and what you can or cannot do with it. For example, you can't spend it. I could get all the gold coins in the world. In fact, it's interesting to note, and you may not realize this, but all the gold that's ever been mined could be put on an area the size of the tennis court, 30 feet deep. That's all the gold that's ever been mined in the world. So it's not something that we have a great deal of, and it's something that you need to get it the best way you possibly can, and usually buying it from someone else that's trying to sell it. So, and you pay a price for it. You pay a fee. That fee rate, it varies between one brokerage firm to another. And that's something else that if you're going to buy gold, and you mentioned gold up front this morning, if you're going to buy gold, you need to make sure that the person from whom or the company from whom you're buying purchasing the gold is a reputable company. And there's a lot of companies out there that offer it that frankly are just not that reputable. So you got to be very, very careful with it. But you can't spend it. If I were to go across the street and buy something with a $50 gold piece, which by the way is worth about $1,975 this morning, and I bought something worth $75, they're not going to give me $1,900 back in change. They're going to say, "Hey, you're $25 short. This is only a $50 gold piece. You need me to give me $25 more." I don't like it for that reason. It's not an income producing thing. It doesn't bear interest or dividends. You've got to sell it to make it worthwhile. So I'm not a big gold guy. Silver's probably more likely in most situations because of the price. You can get into silver a lot cheaper, and it has a commercial use. Gold has only commercial use of gold as jewelry, as far as I can tell. You can buy an old dusty bar of gold that's 1,000 years old, and when you shine it up, it looks just exactly like it did 1,000 years ago. But it doesn't mean it can buy anymore. That's the problem.
All right, but what about in this era of high inflation, of dollar debasement, of really shaky currencies? Now, granted, the dollar has performed better, but it's often likened to the best looking horse in the glue factory or the cleanest shirt in the dirty laundry pile.
Right, that's exactly right, and it's unfortunately that's the problem we have with it, because it's one of those kind of things that if you buy it, you need to have it's a hedge against inflation. But you stop to realize that the stock market, the S&P 500, all of those things have gone up in direct relationship to what gold has gone up in the last several years. In fact, real estate values, if you're going to invest in something, they've doubled in the last 10 years. And there are income producing ways there with the stock market, with the S&P 500, with investing there. You can turn it into income, but you can't turn it into income with gold. So it's okay if you're going to put it in your portfolio to hedge against inflation. It's okay if you're going to put it there to say, I can't lose this. You may not, but remember the gold values bounce up and down pretty precipitously. They go from top to bottom pretty much along with the economy. So in that regard, it's okay if you just have a little piece you want to put in there to keep. To be honest with you, I've got a little bit of gold right now. I'm probably going to end up giving it to the grandkids when I retire. When I pass off this mortal coil, I'll probably pass it on to them. But I doubt if I'm ever going to use it for anything worthwhile because I have money for that. I have dollars for that. By the way, did you read this morning that Putin is trying to tie the ruble to gold? Be the only country in the world, if he succeeds, that has actually gone back to the gold standard, which is interesting, I thought.
Yeah, very interesting. And hey, the problem is no other currency in the world is linked to gold. So if he pulls this off, really backing it, and I don't know that he can because there's no trust in the world for him. But if he's able to do this, there'll be a shortage of rubles because it'll be the new Swiss franc.
Exactly right. People will be buying rubles and they'll buy up all the rubles. And then there you are. You're going to limit the value of the gold. In fact, he's buying it, I think, 5,000 rubles to 1 gram of gold. And there's 28 grams of gold in an ounce. You can do the math yourself and see that it's going to come out to around $1,300 to $1,400 per dollar. I mean, in our dollars per ounce instead of 1975. So it's going to be, he's doing it for a reason, but I don't think it's going to work. I just don't think it'll pay off for him.
Yeah, well, hey, when we look, we see the state of the world, though. What's your take on inflation? Is it just transitory, Dee? Or is it something that you need to be concerned about?
No, and they shouldn't have called it transitory to start with. That was a government tall tale. No, we're going to be in inflation. I read this morning that inflation for March hit a little bit over 8.25%, somewhere in that neighborhood. So we're looking at, and of course, they don't consider food and gasoline, which has always seemed amazing to me because of their up and down nature, but they don't use those features in figuring the inflation amount, but it's still at 8.25% for March. So is it going to be around? Yes, we're going to have inflation until the government decides to stop turning on the money crank in the basement of the Fed building and printing money. As long as they're printing money to solve their problems and making our values of our dollar go down, we're going to have inflation. And I think we're stuck with inflation for, I think, at least 2 to 3 years at where we are right now, between 5 and 8%, 9% inflation. If you're out there trying to buy things, my used car, I got to tell you, I have a used car that I found that is worth more today because of the inflation than it was when I bought it. This is crazy, but that's exactly where most people are right now. Inflation is going to be around with us for a while.
All right. So inflation tends to run in cycles. And you have these inflationary waves. So what do you do to protect yourself? Because your paper assets, maybe they're going to do well this time. Basically, in the 70s, we had like major bear market, lasted quite some time till around 1982 when the current bull market started. I would say the Super Bowl cycle started. Obviously, we've had numerous bear markets of short duration during that time. But what if we get another 10, 20-year bear market in the stock market? Where does that leave you?
Don't just survive, thrive. The Financial Survival Network.
Goldterra Resource Corp is a gold exploration company that has assembled a highly prospective district-scale land position on the doorstep of the city of Yellowknife in Canada's Northwest Territories. Goldterra is currently focused on expanding and delineating gold resources at the company's Yellowknife City Gold Project with a goal of discovering over 5 million ounces. With ready access to infrastructure and multiple high-grade gold discoveries, Goldterra is on track to re-establishing Yellowknife as one of the premier gold mining districts in Canada. Goldterra trades as YGT in Toronto and YGTFF on the OTC. For more information, go to goldterracorp.com. That's goldterracorp.com.
This is the Financial Survival Network. The information you need to thrive now more than ever.
Well, what it does, it means you're going to have to find, and there are products out there, as you know, Kerry, in the marketplace that provide inflation planning and built-in inflation planning. And what you have to do is ask your advisor, what do you have in your portfolio that will help me protect me against inflation situations? I have products in my portfolio that will provide an inflation rider, almost an inflation rider, something that is built in with the interest rates that can be changed. If it's based on an index and the index is climbing, that's going to help with the inflation situation. But you've got to be careful about where you put your funds with this inflationary situation. There are places that you can that will offset, if you will, the losses that we're going to see, I think, over a period of time. I'm one of those that believe that the market is so overly valued right now that it could be pushed over the edge with almost no problem whatsoever, and we could see a 30 to 40% drop in the value of the market over the next year or two if we're not careful. So it just all depends on how the government plays their game and how they try to play this game with us and how much we're willing to stand up and, tolerate what they're trying to accomplish. But yeah, there are things out there in the marketplace. Indexed annuities are still good. I think they would work well depending on the index that you choose in that situation. I'm not into variables right now because the market situation is a little bit. I mean, the variables that I've seen lately, some of the marketplace situations are in they're 40 points too high. So I'm just kind of watching it from that standpoint, putting my people more conservative in bond and bond-like instruments, although you have to look for the bonds to make sure they're worth anything too, as you well know.
Yeah, but, bonds could easily turn into bombs, right?
Exactly. That's a good point. So you got to be really, really careful and make sure you're dealing with the people that understand how those things work in the long run. But I am of the opinion that there are things that you can get that will have inflation values built in that will assist you in your retirement situation, so that you don't have to worry about it down the road.
So, in your take, Dee, gold is just a barbarous relic?
It's fun. It's a fun to play with, but it's not going to do you any good. If you buy gold right now and it goes to $5,000 an ounce, I'm going to almost guarantee you the 50 years I've been in the business, we're going to see the market go up. We're going to see the real estate market go up. We're going to see values go up in all the other areas commensurately. And if that's the case, when you get ready to sell the gold, you're going to pay another fee for it. By the way, you buy it with a fee and you sell it when you pay a fee, and you can lose the value of the gold real quickly what you've got. So it's something that you might have to hedge in case we ever get into a bartering situation. But other than that, I don't really put gold in my clients' portfolios for income.
All right, but in 1997 or 8, the price of gold was around $250 an ounce.
That's right.
Now $1,975 an ounce. That's not such a shabby performance for 20 years.
It's not such a shabby performance, but when you lay it down alongside other opportunities for investing in that same period of time, and I go back to real estate has doubled and redoubled in that period of time, the value of real estate. So if you bought into a property and you wanted to sell the property, you're going to get about 4 times more than you put into it over that same period of time. So gold, although it was about 200 and up to 1900, you can see the same values in almost every investment you've got over that same period of time. I'm just saying that gold is okay if you want to hedge it and then turn it into dollars and put it back into your income. That's perfectly okay, but then you're going to have to buy an income product in order to make it work.
Yeah, well, all of this is conditioned on that things are basically going to continue on the way they have been, and we could be going into uncharted territory here, couldn't we?
I think we are in uncharted territory now. I really believe we are. I'm seeing things that are different than anything I've ever seen in my 50 years of experience in the retirement industry. This is absolutely uncharted territory where we are right now. So we're having to be very, very careful with our clientele, making sure that what we put them into will be valuable for them down the road. But it's really interesting to see it. I attend seminars every day. Even at my age, I go to seminars to learn things. And I find that everyone is just as concerned about this situation as you and I are.
Yeah. So inflation protection, real estate, are you telling people just go for real estate because it's going to keep going up, rents keep going higher, kind of gives you inflation protection?
If they want to be in real estate and they want to be a landlord or that sort of thing or invest in real estate, we put a lot of people in real estate investment trust situations right now in their portfolio. We have some REITs that are making good money. And yes, that would be a good place to put your money right now if you're wanting to have a long-term gain and and something that has been stable over the last 20 years and continue to increase in value.
Yeah. Okay. So real estate, but paper assets, the profits there can be very ephemeral. We've had this huge run up since '08 and '09, but the market could go down 80% any given moment.
I totally agree with that, and that's what you've got to be careful. You need to make sure that part of your portfolio that is the basis of your portfolio that you're always going to have is put someplace where we don't have to worry about that potential 80% drop in the market. If we have that 80% drop, we're going to be in real trouble.
Yeah, well, we are in real trouble. It's just most of the world hasn't really come to that conclusion. Most of the country hasn't. They're too busy tweeting and doing social media and other productive activities like that, Dee.
That is very true. And in fact, we need to get our head back where it belongs and start thinking about the right things instead of the things that don't really matter to anybody. It really doesn't matter to anyone. I try to keep my clients' heads level and keep them out of the clouds and make sure they understand exactly where we're trying to go.
All right. Well, hey, you've given us a lot to chew on there. You don't think it's good to have a little bit of gold in your
I've got a little. It's okay.
Hedge?
I've got a little bit. It's okay. I've got some that's like I say, I probably will never do anything with it. But yeah, it's okay to have a little bit of gold if that's what you want, as long as you don't depend on it for your income down the road.
Right.
You're going to have to turn it into real money eventually.
Okay. You got any reflections on cryptos, Dee?
I'm leaving cryptos out because they're not an income product either. They don't have an income base. They don't have dividends and interest. So we're leaving cryptos out. For those people that are young enough to take a shot at cryptos and have some money that they might want to put out there and hope that it works. But cryptos have a barometric history, as you're aware. They go up and they go down, and they go up and down quickly. You almost have to watch cryptos on a daily basis.
Yeah. Well, a lot of money has been made there. A lot more money than in any other asset class, and I would classify it as an asset class. Hey, Dee, if we want to find out more about you, connect with you on the web, where do you go?
Yeah, just go to deecarterfinancial.com. That's DEE carterfinancial.com, and we're out there, and we'll be glad to talk to people that are interested in talking about retirement. We have people from all over the country giving us calls, and we appreciate that.
All right, you got it. And if you got a question for Dee, you can always send me an email, kl@kerrylutz.com. Don't forget to go to the site, financialsurvivalnetwork.com, and get your free weekly newsletter going out shortly. Dee, always appreciate you coming on. We'll talk to you again soon.
I appreciate it, Kerry. Thank you for the time.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.